Now let's talk about this and other macroeconomic happenings in Nigeria. This day with Dr. Josh Bamfo. Dr. Josh Bamfo is the partner and the head of the transfer pricing services practice at Anderson, Nigeria. Perhaps you can tell us some of the expectations at this time. Dr. Bamfo, good morning and thank you for your time.
Good morning, Ini. Thanks for having me.
So Dr. Bamfo, at this time now, we've seen dust beginning to settle on the protests, at least in most parts of the country. Thankful for that, even though unexpectedly or unfortunately, I meant to say, we've seen some damages. But, you know, it comes back to the issue of fuel subsidy removal. We've seen the Naira trying to find a balance with the new Dutch auction system now reintroduced by the central bank. But, you know, Nigerians are in a haste and asking, when can we begin to see the benefits of these reforms? We had applause from IMF, from the World Bank for those reforms. When do you think, as an expert, as an economist, when can we begin? When would be a logical time to expect benefit from these reforms?
All right. Thank you very much, Ini. I think just to backtrack a little bit, the major reason why for these protests is because cost of living has become unbearable for the average Nigerian. And how do you measure cost of living? You look at inflation rate as one of the major measures of cost of living. Inflation rate has been on the very high side in recent times. Prior to the current Tinubu government taking over, inflation rate was already on the high side. As of June 2023, inflation rate was around 22.8%. That was just when the current government took over. So the two major reforms that they implemented, unfortunately, had the unintended adverse impact on inflation rate. So one was the removal of fuel subsidies, which meant that the price of fuel at the pumps, was going to go up clearly. And the second was the quest of the CBN to try to bridge the variance between the official market rate of the exchange rate versus the power market rate, by moving from a fixed exchange rate regime to a more floating exchange rate regime, where you allow market forces to determine, the price of forex, which is the exchange rate. Yes, we've been able to achieve one of those goals, which is bridge the gap between the two rates, power market and official rate. However, it has come at a huge cost, which is high volatility of the exchange rate. Now, exchange rate has then, depreciated significantly. The official rate used to be $1 to 460 as of May 2023. Today, it stands at $1 to around 1,600. That is over 300% increase, within a span of a year. That also adds to the cost of living because imported products get impacted, when you have your exchange rate depreciate significantly against the hard currencies. Now, in the quest of the Central Bank of Nigeria to then deal with the high inflation rate, which has moved from, about 22.8% to today, which is around 34.2%, all right, they've had to increase monetary policy rate, which is the interest rate at which the central bank sells, funds to other commercial banks, from 18.5% as of June 2023, and today stands around 26.75, which means the cost of borrowing has also gone up. So if you look at the three markets, the market for goods and services, inflation determines that clearly cost of living has gone up. You look at the market for funds, cost of borrowing has gone up. You look at the market for forex, exchange rate has gone up. So by and large, cost of living has gone up significantly. Question is, how do we actually alleviate part of this? And remember, at the same time, wages and salaries have not gone up as much, which means that the standard of living of the average Nigerian has gone down. In fact, the economy has not grown at a fast rate. The last data we have, which is Q1 of 2024, GDP growth rate was at 2.98, pretty close to the population growth rate, which means that if you look at it from a per capita point of view, we are pretty stagnant in terms of growth. So really, these are challenging times. Now, in terms of solution, clearly the CBN has done a pretty good job in trying to, do the best they have under their control to curb inflation. but the focus has been on increases in monetary policy rate. What has been my view is that there should be increased focus in terms of stabilizing the exchange rate, because the exchange rate has the potential of affecting other key areas of the economy, including inflation itself. So, for example, fuel subsidy has led to fuel prices going up. However, this problem has been actually worsened by the fact that our exchange rate has weakened and we need to import significant portions of these petroleum products. And with the weakening of the Naira against dollar, that makes the price of fuel products at the pump even more expensive. So you have two major forces working here. Removal of fuel subsidy, that makes the prices of fuel at the pump go up, and the weakening of the Naira, that also makes the price go up. So you can see the two forces working in tandem. Once again, if you look at other imports, once you have a weakening Naira, that is going to make it expensive. So from my perspective, if we're really going to curb this inflation rate, in a relatively short term, the focus cannot be predominantly on just increasing monetary policy rate. There should be increased focus on also ensuring that the exchange rate doesn't further weaken. And that's the reason why I've been of the view that moving away from a fixed exchange rate to the other extreme, which is floating exchange rate regime, where there isn't much guidance in terms of where the CBN wants the exchange rate to be, for me, will not really solve the inflation rate problem in the short term. However, there should be a middle ground. There should be some management of the floating exchange rate regime. I believe that if the CBN was committed to ensuring that the exchange rate hovers within a reasonable band, such as 1,000 to 1,200 Naira to a dollar, and that's everything possible, including intervening on a consistent basis to maintain it within that band, it will be able to take out significantly the speculative activities of speculators who anticipate that the Naira is going to depreciate over time, and then demand so much within the short term with the intention of gaining when the Naira further depreciates.
So Dr. Banfo, the thing is removal of fuel subsidy, but even as we speak, we do know from numbers and perspectives and calculation that subsidy is still being paid. Then on the other hand, floating of the exchange rate, we've seen many interventions from the central bank. So, I mean, it's actually managed, so it's not really like we're still looking at the real value of the Naira. So the question is, was it really worth it? And what are the benefits, or what benefits can Nigerians expect, after going through this hardship?
So clearly, when you do an auction, right, the whole idea is that it's going to be based on demand and supply. However, when you determine that I'm going to make sure that I manage the exchange rate within a band, not fixed, right? There's a difference between fixing it to a specific price, which was the previous governor's position, where we fixed the Naira to, the Naira to the dollar at a particular rate, such as 460, and it stays at that particular rate for a significant period of time. But if you can manage it within a band, what it does is it manages the expectations of investors as well as speculators in the market. Today, yes, there's some intervention. Yes, the Central Bank of Nigeria sells dollars to the banks as well as some BDCs. However, there's no communication in terms of where they expect the price to be. And that is the biggest difference. We all know how the central banks across the world impacts, the expectations of investors. We saw that even in the US, when the Fed delayed in cutting down interest rates, and we saw how on Monday, stock prices behaved, all right? So all these investors make decisions based on their expectations. They speculate. Now, the Central Bank of Nigeria can manage those expectations or those speculations and can be able to deal with some of the speculative activities in the market. Until they do that, what is going to happen is, yes, you are intervening, yes, you are supplying as much as possible, but you are still subject to the demand and supply forces. And there's a big chunk of demand which is being driven by speculators that you cannot actually manage. And that is what is leading to the Naira further depreciating. And as long as the Naira continues to depreciate, it's going to be very difficult for us to bring price stability, achieve price stability by the CBN. In other words, bring inflation rate down. Yes, Central Bank of Nigeria is doing a good job in terms of increasing monetary policy rate, but it comes at a huge cost to the economy itself. When the cost of borrowing keeps going up, investors cannot borrow as much, in order to expand their businesses or even start new businesses. And that doesn't create a lot of job opportunities. That worsens the standard of living of the average Nigerian. Coupled with the high cost of living, that creates misery within the economy, and that leads to such protests. So I think it's very important that CBN considers tweaking its policy to now focus a little bit more on exchange rate, as opposed to their significant focus on monetary policy rate in order to achieve price stability.
All right, sir, Dr. Josh Bamfo, thank you for that suggestion. We do hope that the listen and perhaps maybe play around with it and see if it works. Dr. Josh Bamfo is partner and head of the transfer pricing services practice at Anderson, Nigeria. Thank you for your thoughts.
Thank you very much, Ini.
Let's take a break. When we come back, I will also continue, somewhat on that line. Credit to private sector, those loans, how are they doing? How are small businesses dealing at this time? We'll talk about that after the break. Just stay with us.